Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by a company CGS-CIMB. Now, this webinar is the second familiarization sessions for Derivative Virtual Trading Challenge 2024. So in this webinar, we're going to explore how do we use technical indicators to maximize our futures trading profit, right? So this session is titled Mastering the Market, Maximize Your Futures Trading Profit Potential with Technical Indicators. So we are very honored to have two distinguished speakers here to join us in this session. So the first speaker will be Mr. Warren Mark, who is the founder and CEO of Tech Optimus. And then it will be followed by Mr. Muhammad Fawaz, a senior associate from CGS International Futures Malaysia and Berhad, to tell us more about the VTC as well as what are CGS-I offerings. All right. So my name is Chen Chu. I'm the moderator for this webinar. Now, before we begin, this is our disclaimer. Whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed futures that we cover here. If you decide to make any investment or trading decisions, you're solely responsible for all the investment risk. Now, allow me to briefly introduce our first speaker. He has 31 years of experiences in banking, securities, and derivatives industries. He is the founder and CEO of Tech Optimus Berhad, an award-winning fintech company. He is the former head of investor education and 4 other departments in Bursa Malaysia. He has 9 years of experience as a professional trader and dealer in the treasury departments of 2 banks. He was the TEDx UTM 2019 speaker, BFM guest speaker in 2019, and City Plus FM guest speaker since January 2022. He is a columnist in Nanyang Xiangpao newspaper since January 2018, where he writes weekly investment articles. He graduated with a Master of Science Finance from RMIT University, Australia, and he passed 4 professional certifications and licenses, which are respectively FRM, CFP, MFOR, and HRD Corp Certified Trainer. So it's none other than Mr. Warren Ma. So Warren, how are you today?
Very good, Shane. Thank you very much.
All right, cool. So I will stop sharing your my screen right now. So I hand over the screen control to you. So you may begin to your screen share.
Thank you, Shane. Okay, let me share my screen. Okay, welcome everyone. Very thankful to Bursa Malaysia, Shane, and of course Fawaz, my new friend. Today we are going to share some experience to our impending participant or the future trader in the derivative market. Very quickly, my name is Warren Mark. I'm the CEO of Tech Optimus. Yeah, of course. Today I'm going to share with you some of my experience in technical analysis, how to master the market, maximizing your future trading profit potential with technical indicator. Okay. Okay. Of course, our company is a fintech company, finance and technology. And very quickly, I have 31 years of experience in the market and also 15 years in Bursa Malaysia. Actually, I was the head of 2 Bursa Malaysia departments, operation risk and also financial product development. And I'm also a columnist in Nanyang Xiangpao since 2018. Yeah. Okay, of course, today this is the agenda. Of course, we will go one by one. So the format for my talk, my sharing is that I will use about 25-30 minutes to run through some slides to explain the theory behind this different point. Then I will use about 20 minutes with chart and show you what are the theory I just cover like 20-25 minutes. Yeah. Okay. So now currently we will focus on theory behind my sharing. And also we will apply the theory by using chart to show you what do that means by having this 5 pointer. Okay. So first of all, today we will cover two look like very simple but important concept. Yeah. Of course, we will learn the fundamental difference between leading and lagging. Maybe some of you say leading and lagging indicator, I know them. So what is the significance? Later on, you will see actually if you don't differentiate leading, lagging in your application or in your when you apply it in your trading, then you are still using them, but maybe you do not maximize the benefit of each group. Yeah. So this is what I'm going to share with you. Of course, I also include when and why to use each type because I believe a lot of people use technical analysis indicator without realizing or without thinking about what are the difference. When should I use this? When should I use that? Because most people, they will conveniently set whatever parameter, whatever indicator that they like in a chart, but don't realize that actually, if we are trading under different condition, different volatility, different instrument, different time zone, different many other aspects, actually you might need to adjust certain parameters, certain indicator in the technical analysis. Yeah, that's what I want to share with all of you. So first of all, we talk about what are the fundamental differences. Yeah, a lot of people know okay indicator, but they may not know actually certain indicator are grouped, are categorized under the leading, some are under the lagging. So basically, leading indicators that predict future price movements by providing signal before a new trend or reversal occur. Yeah. So this one is like predicting the movement. So prediction is the key here. For example, RSI or stochastic RSI, MACD histogram, then some might realize that MACD, there is a histogram because most people, when they look at MACD, they just say MACD. So they don't realize or they don't even make good use of the histogram. They only make use of the two lines, yeah, the signal line, MACD line, yeah. So later on, we use chart to share with all of you. And of course, for this prediction of future price movement or the leading indicators is best used in volatile market. Meaning to say that if the market is quiet, sideways, do not really show you a volatile chart, then when you use these leading indicators, may not give you good result or may not give you good insights. Yeah. So the advantages of using this leading indicator is can help trader to enter the market early and maximize profit potential. Yeah. So this is the usefulness of this. And of course, the advantages is they are more prone to false signal during sideways market. Yeah. Because during the sideways market, if you see up and down, but may not actually give you a real good signal. That's why you sometimes you see false signal, false breakout, false this and that. Yeah, this is the reason. Yeah, because a lot of people think that oh, false signal, false this and that, maybe because of what they call it syndicate 庄家, because they say this is a fake signal created by machine algo trading, but they don't realize that actually maybe they are using not suitable signal during different market conditions. Yeah, so this is for leading indicators. And there's another group is called lagging indicators. This one is not to predict the future price movement, but instead is confirm trends and provide signal after the trend has started. You can see that one is to take, but this one is to confirm. So they have different application or usefulness. Yeah. For example, moving average, Bollinger Bands, MACD lines. All this, they built in some averaging effects. For example, I believe you realize that Bollinger Bands, the so-called basic or the mid band, is actually a 20 period moving average. Yeah. So of course, MACD, they also have what? 12, 26, and 9 period. And of course, moving average can be anything 2 period to infinity. Yeah, technically. So this group of lagging indicators are best used in trending market. Yeah, either uptrend, downtrend. Maybe if you think sideways is considered a trend, then include the sideways trend. Of course, most people can only make money when the trend is uptrend or downtrend. The one who can make a lot of money from sideways trend, basically they are the what options issuer or structural warrant issuer or any issuer of any instrument that make money when the market is not really trending uptrend or downtrend. Yeah. And their advantages are more reliable during stable trend, reducing the risk of false signal. So this moving average especially is to smoothen the noise and also false signal so that you will not simply jump into the open the position or close position just because of some interim short period volatility. So this one is to smoothen and also reduce the risk of false signal. And the disadvantages, of course, there's a pro, there's a con, may result in a later entry, potentially missing some initial profit. Meaning to say that if you use 5 MA to go in, yeah, then maybe 5 MA just suitable. But if you use a longer one, then potentially missing some initial profit. Yeah, if you are using moving average. Of course, if you don't use moving average, if you only use, for example, candlestick, they call it price action, then you don't have this problem at all because price action look at candlestick movement, support and resistance to make decision whether want to open position or close position. Then without any average effect, then it's okay. And of course, now we know there are two group of signal or the indicator. One is lagging, one is this. Yeah, okay. Okay. One is lagging, one is leading. Then the next question is when and why to use each type based on trading style. Okay, before we talk about when and why, of course, we have to talk about what? Trading style. So, of course, for trading, the shortest is scalping. Scalping, buy and sell, maybe you think it's within minutes, but some within seconds. Yeah, bing bang, in and out. Yeah. So, of course, for this trading style, yeah, most of them are professional trader. Then for the leading indicator, we use it in a quick early entry as price momentum changes. Meaning to say that we use this when we are doing scalping, we want to come in, we want to open position very quickly, and we want to close position to realize profit within seconds or minutes. Yeah. Then we use the leading for this scalping. Of course, technically, lagging indicator for scalping is not really favorable because due to the slow reaction time when it's not suitable for fast-paced trading. So technically, for lagging indicator, we don't use it for scalping. Yeah, it's out of the question. Yeah. So for second trading style, which is the day trading. Yeah. So for day trading, meaning to say that you buy in the morning or within the day and you close it within the day. Yeah. I am a day trader. Most of my actually I'm a both scalping and a day trading trader. Yeah. I like to do it within the days because of what? One of the one of the benefits of doing day trading is you don't really expose to high risk in terms of overnight risk. Because anytime when you carry your position, open your position, and carry to the next day, you will never know what will happen after market close. For example, after 6 o'clock, and then until next morning, 10:30 for FCPO. Of course, now it's very good because now we have 9 market. At least if anything happen, we can do what? We can close position at night. Yeah. So at least that is a good thing. Of course, if you do like for example, US market, actually you can do trading within 24 hours, you may be able to trade for 23 hours. Then it's good. So that you will not be affected by overnight risk. Yeah. So for this, we use a combination of leading and lagging indicator. Yeah, for leading indicator, we use it for entry signal. And for lagging, we use it for see that's mean we close position to take profit or cut loss. So this is to what? To maximize trade with the same day. Yeah, this is what we do for this second trading style. Of course, for people who do not really want to do daily trading and who wants to hold a longer period of position, then this is called swing trading. Because swing trading capture big part of a upswing or downswing of a price movement, be it uptrend, upswing, or downtrend, downswing. Yeah. So they want to capture a very large part. And of course, swing trading require a higher risk tolerance. For day trading, maybe you just say, I want to close my position with how many ticks of losses or how many ticks of profit. You have preset. Swing trading, technically, you don't preset you preset the loss, cut loss, but normally you don't preset the swing. Yeah, you don't tell yourself, okay, for this swing trading, I will want to take profit within like 10 ticks, 20 ticks, 100 ticks. You don't do that normally because you let it swing and you slowly adjust your sit position so that you can maximize your profit potential. So for this, we use lagging indicator to confirm the trend over several days to weeks. Yeah, talk about days and weeks and minimizing the risk in a long-term trade. So for swing trading, a lot of time people will use moving average. Yeah, they will use a moving average. That means as long as the price don't drop below certain moving average, they will let the profit run. Yeah, because the moving average is serve as a support or a cut loss level. As long as the price follow a trend, follow a swing. For the interim adjustment or retracement of the price, they will not simply get out. Yeah, they may have a risk tolerance of 10, 20, 30 ticks rather than 2 ticks, 3 ticks for a intraday. Yeah, so that they can capture, so that they can check all. Yeah, okay. So Ryan have a question. Mathematically, all indicators are lagging, correct? Since all is based on past data. Good question, Ryan. Technically, I will agree with you. I will agree with you. But this lagging, we understand lag is like historical. Leading doesn't mean that this is in front of what is has not been happened. That means it's not happened yet. Talking about some futures. Yeah. In a sense that this leading, meaning to say that it will be able to tell you make prediction based on this leading indicator, how the future price, how the future trend should happen, should occur. Yeah. So it's not talking about this indicator leading the happenings of the data, because the data is only now. We are not talking about this indicator, talk about today, the price is now. This indicator actually is a tomorrow indicator, the next week indicator. It's not in that sense leading. Leading in a sense that, yes, now we have this data, we have this price. But based on this so-called leading indicator, we are able to predict how the future trend should occur before it's happened. So it's talking about the future happening. In this sense, this is the leading indicator. Yeah. And if you talk about data, of course, everything is past. The indicator based on past data. But the leading part is talking about what? The leading of the prediction of the price change. Yeah. Okay. So afterward, we'll talk more about this. So when and why to use each type based on what? Now we say based on market condition. Just now we talk about something else, and this is market condition. So for specific market condition, if this market is a volatile market, swing high and low, yeah, move up and down, then leading indicator will be more effective because they can indicate early shift in momentum before the new trend established. Because when you use anything with averaging, with 10 period, 20 period, then you will smooth out everything, and then it's not suitable to do a prediction in a volatile market. But for a condition of a stable or trending markets, then this volatile and trend is different thing. Volatile, maybe you can relate to stable. Yeah. Very volatile, very stable. But this not only volatile, there is a trend, trend or downtrend. So for this, more effective as they provide confirmation after the trend is established, ensuring the trader isn't misled by minor fluctuation. So in order to know whether a trend is already established, we need to observe for a while. We cannot say, okay, I use 1 minute chart and I watch for 5 minutes, 10 minutes. I know the trend is uptrend, downtrend. Then you will regret, because a lot of people, not only they don't use 1 minute, they don't even use 5 minutes. They may use 15 minutes to do trading. Yeah, to them, anything below 15 period doesn't mean anything to them. They don't see the trend. Yeah. So this is a reason why for trending markets, they need a lagging indicator so that this will provide confirmation for them to hold their position, especially the swing trading position. Yeah. Okay. Sorry, I think how come okay. Yeah, sorry. I don't know why this one is not moving. Okay. All right. Okay. So our second point is to gain hands-on experience with some of the most widely used technical indicators. So afterward, I will use actual chart to show you on this moving average, MACD, Bollinger Band. To me, these are the few most reliable, most trustworthy, and most useful, plus I would say most easy to understand. Yeah. So if you can master the application of this field alone, I would say you are 50% there already. So you just pick another 2 or 3 indicator that suit your trader or suit your trading style. That is good enough. Yeah, that is good enough. Okay. So This could be the most useful. I would say this could be the most useful, most widely used indicator. It's just called a simple moving average. Yeah. So simple moving average is calculated by averaging the price of a stock over a specific number of days. For example, if you talk about 20 moving average, it's very easy. You just add up 20 period of the price and then you just divide by 20. Yeah. So this is a 20 simple moving average. Actually, this is simple average. You talk about moving is because of when you calculate the first 20 period, this is the average. When you go to the next day, there's 21 day, you will calculate the 20-day moving average from today all the way to the last 20 days. That means we will drop the data for day one because we just need day two all the way to day 21 to calculate the simple and moving average. That's why it's called moving, yeah. So this is to smooth out price data to identify the direction of the trend, yeah. So they want to smooth out the interim noise or volatility. And this is a good thing after I will show you in chart. The crossover of a short-term SMA above a long-term SMA, we call it golden cross, yeah, suggests a buy signal, while the opposite suggests a sell signal. That means if the short-term SMA cut from above and go through a longer-term SMA, this is called a big cross. So from the name, you know, golden cross is like you get a pot of gold. Big cross is like, not something good. Yeah. Later on, we use a chart to show. Okay. So moving average is a simple version of the most fundamental version of moving average. Yeah. And that one talk about only a single moving average. And there is one very, very useful moving average. It's called moving average convergent and divergent. And some say this indicator is the king of indicator. That means to some, this is the best of the best. Yeah. So this is calculated by subtracting the 26 period EMA from the 12 period EMA. Yeah. So this is exponential moving average. The main difference between the simple moving average and this so-called exponential moving average is that simple moving average, you just add up the individual value divide by the n period. If this is 20 period, you just add up individual value on a daily basis or on a per period basis, divide by the 20. For this EMA, they will have the first one SMA, they call it equal weightage. That means the weightage for 20 period, every day you will have 5% weight. But for this exponential moving average, it will have a heavier weight for the latest data. Yeah. If this is 20 period, for the latest data, they don't give them 5% weight. Instead, they may have 10% for one day. That means they will reduce the weightage from day one, which is 20 days in the past. So they will reduce it so that they will give more weight for the latest data. Reason being is that the latest data, the latest price movement is the more relevant ones compared to the earlier one. Yeah. And this one use 26 period. And then from the 12 period EMA. Then after you subtract, you will use another 9 period to do what? To average it out. Yeah. So 26 minus 12, there is one value. Yeah. After you get this one value for 9 different period, you just do a average also. Yeah. So this is how you do it. Yeah. So this is to identify changes in the strength. Strength. Just now, normal moving average, you don't see strength. You may see direction. And you can actually say you will see a little bit of momentum because you can see the movement of the moving average and the duration of a trend. Yeah. So because you have two line and also you have a histogram. After I show you in chart, there will have histogram. Then you can actually see even the momentum. Yeah. Because when you look at one line, one simple moving average, even though you say, yeah, I see momentum there, but the problem is you will not be able to see clearly because you see lines, you don't see histogram, you can't see momentum. Yeah. So similarly, there is a crossover. Yeah, just now we have golden cross, they cross. Actually, this one similarly they have this as well. Crossover of the MACD line above the signal line is used as a buy signal, and the crossover below the signal line is used as a sell signal. So normally what I say is that, okay, when the line is above zero line, is bull. Below zero line is bear. After I will show you in the chart, okay? Another very, very useful one is Bollinger Band. Yeah. Bollinger Band consists of three different bands. Yeah. One is and also the mid band is actually is 20 period moving average. Yeah. So you have a upper band and the lower band. Actually, this upper band and lower band, why there is an upper band and lower band and how to find it. Actually, they find a end period. Of course, this end period is 20 normally. No, no. 20 period is SMA. End period standard deviation is they use two standard deviation for this end period. Yeah, two standard deviation. So usually it's two. Yeah. So one is a plus, one is a minus. And this used to measure market volatility to identify overbought and oversold. And actually, what I found out or realized after so many years of trading, I work as a professional trader in two banks for 9 years. And also now I'm a coach for 6, 7 years already. I realized actually a lot of book theory, if you use it for maybe swing trading, if you use it for position trading, they are quite accurate, applicable. But then if you use it for day trading, actually, I would say they are missing benefit of using that technical indicator. After I will show you. Of course, another concept called band squeeze. That's mean the Bollinger Band squeeze between narrower. There's a possible sharp price movement in either direction. Meaning to say that after a band squeeze, actually the price can be sharply up or sharply down. Yeah, but we don't know yet. So very quickly, I just showed you this chart before we move to the real chart. Yeah. So this is the Bollinger Band, and this is the upper band. This is the lower band. And this is the end period. Normally, it's a 20 period. I don't say 20 days because of only if you are using a daily chart, you call it 20 days. Otherwise, if you want to use it for any other period, you are supposed to call it 20 period. Yeah. And of course, normally what people interpret is when the price is touching the upper band or even go above the upper band, they call it what? Overbought. That means if overbought, there will be the impending reversal of the trend. This one could be overbought, but here is not. So actually what they put in is, and for my application of Bollinger Band, I would say the original definition of the how to use a Bollinger Band is more suitable for what? Sideways. Sideways meaning to say that when the price touch the upper band, very likely it will go down. When the price touch the lower band, very likely it will go up. Yeah, this is called the overbought, oversold. But when you look at this real uptrend or real downtrend, you don't normally see this. Meaning to say that when you see the price is at the overbought level, it will continue to be overbought for many days before it drops. Just like this, overbought all the way for 2 weeks, then only drop. So if you follow book theory 100%, definitely here you want to sell already. Can you imagine if you sell here, the price continue to go up, you are missing a lot of opportunities to make a lot more money, correct? Not? Yeah. So that is a reason a lot of time when you read, when you follow certain theory on technical analysis, we have to be very mindful that it may not be applicable for all kind of scenarios. So we have to know which one is for better for what kind of market condition. Yeah. Just like something like this. Yeah, they say RSI above 80 overbought. Overbought means what? You want to sell. Can you imagine you see this overbought is just right here, correct? Not? You want to sell because the book theory tell you when the price go to overbought, you want to sell, correct? Not? Yeah. But you can see actually a lot of time the price will stay higher and higher, and this so-called overbought level, the RSI will stay flat until maybe 2 weeks later, then only drop. So can you imagine? Yeah, if you sell here, you're missing a lot of business profit opportunity. Yeah. So the third one is learn how to customize the parameter. Yeah, according to different condition and commodity. So what are parameter? So parameter are the setting that trader can adjust to refine how indicators are calculated. So when you put 20 period moving average, that is the parameter. Yeah. So there are two types at least. Yeah. Actually, many types. I just have time for two types. Yeah. So one is called the time period. Just like just now, when I talk about 20, it's 20 period. You change to 10, then will be 10 period. So after you shorten it, it become more sensitive and closely follow the price. So that's been the moving average will follow the price movement accordingly compared to a longer term. Maybe 200 period moving average, you can hardly see price follow any single day or any single week. Not like 5 MA, it will follow almost every single part. Yeah. Another is threshold. So if you use RSI and stochastic RSI, you will see there's a threshold of 70, 30. Just now I show you overbought area mostly are 70 and oversold are 30. Of course, some put it 80 and some put it 20. Yeah. So we will talk more about this adjustment. Yeah. So now we talk about how changing parameter affect the behavior of an indicator. So like I just say, if we use a 20 period moving average, and when we change to a shorter one, then it will more closely follow the price movement. If we change to a 50, then you may not be able to really identify which price actually follow the 50 because actually don't follow because of the what? The weightage is only 2%. Yeah. So similarly for MACD, if you change the fast line, slow line, signal line, then you will see it will affect the so-called convergent, divergent, and the resulting trading signal. This one we will use so you understand the concept after I adjust in the slide. Yeah. So this is called about this is a 20 period. This is 50 periods. This is 200 period. So for 20 period, you can see a lot of candlestick are actually very close to this 20 period. Yeah. And also when the price rise this will be going up. When the price drop, it will see some correction here. And of course, when you have more price drop, you will see the 20 MA moving more and more to a lower part. Yeah. But when you look at this 200, actually it's like a quite a flat line. And you can't even identify or associate any single price movement or candlestick is actually influenced by this or influence the formation of this 200. You can't identify. But for 20 period, 10 period, and 5 period, you will know all this affecting the movement. For this is difficult. Yeah. So another one we learn how to integrate different type of indicator to confirm each other's signal and reduce the likelihood of false signal, false positive. Yeah. Okay. So become more accurate. Become more accurate. Okay. So one way is when we do combination, we combine, and what is the purpose? When we combine, we can provide a more robust analysis because we allow one indicator to confirm the signal given to another. Meaning to say that if we only use one type or a single indicator, how accurate we don't know. Yeah, could be quite accurate, could be not very accurate. But when we put two indicators together, then by observing the result from their individual, when we combine, we have a more accurate entry and exit, or we can be more confident to make a decision whether we want to buy, sell, or hold. Yeah. So this approach help to mitigate the risk associated with relying on a single indicator. Because when you have a single indicator, you may give more false signal under certain market condition. Yeah, especially the volatile one. Yeah. So of course, when we want to combine, we have to ask now what kind of indicator to combine, yeah, or the type of indicator to combine. So for trend following, yeah, then we can use moving average in MACD, which are best used in a trending market to determine the direction. So these are the indicator that we can combine. So this is a trend moving average, a trend following indicator. So for those momentum indicator, that means we want to see the price fast movement. We want to catch the rise, the drop. That is a momentum indicator. So RSI and stochastic RSI, this will help to identify overbought or oversold condition. And of course, volatility index is like Bollinger Band. Yeah, you can see how the band moved. Yeah. So when you combine this, the strategy is to, for the trend confirmation, you can use the trend following indicator like MACD. So you already have a trend following, and now you add the momentum indicator. Then by combining this, you will be able to help you to enter a trade. Yeah, because we will know the trend now and you know when to enter. RSI is very good. Of course, when we signal up and down, which one to follow. Ha ha ha. I like this. Afterward, you use the chart. Yeah. It depends on actually when you have two conflicting signal, then it depends on what is your purpose and also whether that is reliable or not. After we use the indicator to show. Actually, when you use more than two, even two, you may have conflicting. Then you have to decide. Yeah, after we show you. Of course, RSI, if it's below 20 or 30, meaning to say that is no, you don't do anything. But when you start to increase, especially above 50, then it's a very good entry point. Yeah. Of course, for those who study book theory, they will say one touch 70, 80, you better run. But let me tell you, as a day trader, I love to see RSI above 70, 80. That is the time I start buying, not when it's 50 or 60. Yeah. So after I show you. So Okay, let me show you here first before I show you the real chart. You can see this is the RSI. Yeah, RSI. This is above what? Above 70. So ngam here, 69.23. And what is this? This is MACD. So MACD, what you see here is actually is a golden cross. Yeah, you can see these two lines. This is the golden cross. And you see what is this? This is when the candle penetrate above this so-called Bollinger Band. This is the way we short-term trader will take a trade. That means above BB upper, golden cross, and also above 70, yeah, on this RSI. If you solely study book theory, when the price touch Bollinger Band, the upper Bollinger Band, you should sell. When the price, when the RSI goes above 70, you should sell. But the problem is, to me as a short-term momentum trader, especially day trading, this is the place, this is the entry for me. That means other people will sell at 70, I will start buying. Other people will sell when the bar touch the Bollinger Band, upper band. People will sell, I will buy. So can you imagine that is like different part of the world, yeah. But I have been doing short-term trading for many years, and this is how I make money, and this is how I teach my student. So a lot of time when you follow blindly on book, on theory, and don't know how to use it under different market condition, then that's the reason why you don't get the desired result. Yeah. So the last point is adaptive technique. That means we need to be adaptable. We need to make changes to our technical indicator in order to what? In order to adapt to make better use of the indicator during or under different market condition. So moving average, when the market is volatile, you make it longer. Instead of using 10, 20, you may want to use 30, 40, 50, for example. So RSI is the same thing. It's very, very volatile. Instead of using 30 and 70, you use 80 and 20. Same thing, MACD. You want to increase the sensitivity, then you can reduce the span of EMA. Yeah. So basically, we almost cover all theory, and then this is the last bit. We will use chart to apply what we just learned. Yeah. So breakout strategy, range trading strategy, trend following strategy. These are different strategy, and when we operate with the objective of using certain strategy, then we have to adjust our technical indicator accordingly. Yeah, accordingly. Okay. Okay. Yes. Okay. Let us go to the. Okay. Let us go to the chart. Yeah. Okay. So let me go out the chart. Okay. So of course, we will go for our favorite FCPO. Okay, FCPO. So this is okay. So normally, if you study book theory, you will say, oh, okay, when the just like I tell you just now, when the price touch the upper band, that is called overbought. You want to sell. When the price touch the lower band, that is the time you should buy. But based on my observation and application, this Bollinger Band, if you want to follow that theory, you have to make sure that one is the sideways market. If a trending uptrend or downtrend, you follow this overbought, oversold, you are missing the profit potential. Yeah. So for this one, yeah, similarly, just now we say, oh, based on book theory, when the price is above 70, we should sell. This one is let me see, 20 and 80 lah. We should sell. Can you imagine if you sell here? You see what happened? This is the price. You sell here and then go up. And similarly, yeah, when you say, oh, this is the price, you should buy here, correct or not? You know where is this? Because this is below 20, you should buy. Yeah, this is oversold, this is overbought. When you buy here, the price keep on dropping until here. That's why that is not correct way of doing it. Yeah, most people lose money in doing by using chart is because they follow book theory too much. Yeah. So technically for me, intraday trader, I will love to buy is above 50 and above. Yeah. And of course, I love to see all this above 70, 80 is very, very strong. Yeah. Similarly, I will never start buying when this RSI or stochastic RSI drop below 20 or 30. I will never start buying. I will wait for the RSI to go back up. Then only I start buying. Because if you think this is low, it will get lower. Yeah. This is the problem. Yeah. So just now we talk about combining a few strategy. That means we are combining the lagging and also the leading indicator for us to buy. So for example, this is MACD and this is Bollinger Band. Yeah. When we combine our RSI to time the entry, yeah, then we can do what? Yeah, you can see, okay, actually, okay, for MACD, basically, most likely when this two line is below this so-called zero line, here is a zero line, this is considered weak. And of course, just now I talk about momentum. Yeah. I don't know whether you have done this or not, or you have used this before. This is a very powerful indicator for you to buy and sell. Here, this is a golden cross. Yeah. When you have a shorter line, that means the blue line cuts across the red line. And when you see this golden cross, of course, here technically is already green. This is considered bullish. But if you want to be very, very bullish, then you have to wait for this two line to go above this so-called zero line. This is the period the commodity or the stock or the index is considered more bullish. Yeah, it's right here. When it's still down here, it's still not considered very bullish. Meaning to say that if you really want to be super bullish, you need to wait until these two lines go above this so-called zero line. And also, you see this histogram is getting stronger. So when you want to use it plus this, meaning to say that you have to, first of all, find out whether this RSI or stochastic RSI is above 50. And then you want to see whether this MACD is above this zero line or not with the green bar histogram. Then it's better at least minimum the price, the candlestick must be above 20. This is the 20 MA. And of course, the more ideal one is when the price actually move above this Bollinger Band upper band. So when you combine this 50 above zero and this is where you can find a bullish entry. Yeah, a bullish entry. A physical trader follow fundamental as per my knowledge, sir. Yes, if this is a physical, are you talking about physical palm oil? Yeah, physical market, cash market. Yeah, of course, physical trader, they are talking about buy, sell physical palm oil, and they will follow fundamental analysis in terms of the output, the stock count, the demand, supply, import, export. Those type of fundamental, and also talk about whether it's dry season all this season. Yeah, correct or not? So that is, but for me, despite the fact that I'm a technical trader, I use 20% of my time of my judgment based on fundamental, and I use 80% technical. Of course, if you really don't believe in or no time to or don't understand fundamental, if you solely use technical, actually you can also do that. Yeah, logic being actually there is one premise of technical analysis. It say everything should be reflected in a chart movement or discounted by chart or candlestick. Meaning to say that I don't care this is technical, fundamental, news, feng shui, zhongga, syndicate, or even a mistake. All this eventually come to a point, come to a conclusion. Then only this price will match. That means when a price is matched, whatever noise, whatever news, whatever thing happen that affect this price already discounted, find a equilibrium. Yeah, equilibrium. That is why they say you don't have to worry about fundamental. Yeah, you just go for technical. Yeah. Okay. So okay, very quickly, I want to teach you one thing that very useful is that if, for example, especially those are very strong trend counter, very strong trend commodity, you can technically you can always price when the price is above Bollinger Band. And it just let it go until it drop back to Bollinger Band. Then only you consider one to sell or not. This is one way. Of course, how to find a bullish one, you have to be above 20 minimum. If we can penetrate above this Bollinger Band, is better. So how do you get out? So get out, you have to, when the price drop back to BP upper, that is the time for you to consider to get out half of it. Yeah. Of course, I'm using daily chart. If I use mini chart, even you can even see more clearly. Another way is how to get out is you can see from here. This is a so-called dead cross. That means this shorter line, more volatile line, cut below. So because actually this is a lagging indicator. When a lagging indicator happen, you should follow, especially the what, the exit. So when you enter, you want to get a quick entry. Yeah, you want to quickly get in. So you use a momentum or leading indicator. But when you want to get out, yeah, you use a lagging indicator so that you have the best of both worlds. Yeah, you have a best of both worlds. Yeah. For scalping and day trading, what is the time frame to use? What is the longest time frame to use? 15 minutes, 1 hour. Okay. Actually, it depends on the type of commodity. For example, I would say a lot of people use 5 minutes for FCPO. Yeah. For FCPO trading. For scalping, people use 1 minute chart. But if you are not familiar with price action, you use 1 minute chart, it will cost you lose a lot of money because you keep on going in, coming out, going in, coming out. So I will say, in general, 5 minutes time frame is good for like FCP, FCPO, and many other indices. That means if I want to trade, for example, Hang Seng Index, I will use 5 minutes. Yeah, I will not use 15 minutes. But if you want to do a trend following, that means you want to capture a large trend, then you may want to use 15 minutes or even 30 minutes because you want to carry it for days and weeks. Then you shouldn't use 5 minutes. But if you're using scalping intraday, you should use between 1 minute to 5 minutes. Whether it's 1 minute and 5 minutes, it depends on your risk appetite. Yeah. If you are not familiar, you shouldn't use 1 minute chart because it will come in and go out very frequently if you are not familiar. So every single chart, every single bar you see, you will be very, very scared. Yeah. So I will advise you to use 5 minute chart. Yeah. 15-minute chart, if you use it for index, maybe I would say that is useful. But if you use it for palm oil, I would say that is too long. Yeah, that is too long. Yeah. Scalper user use 1 minute or 5 minutes, but for conviction of trend should use, yeah. So if you want to go for trend trading, just now I just said you should use 15 minutes or even 30 minutes. Yeah. Actually, for those 23 hour, then you have a longer hour one. Yeah. Okay. How do we use the history in MACD? Yeah. Okay, good. Just now I just mentioned, actually, for people who say I want to buy or sell, they will look at this golden cross or thick cross. But if you want to see whether the trend can continue, whether the trend is good or not, you look at histogram. The longer, the better. So the longer, the more bullish. The longer, the more bearish if this is the red color. So above zero, green color, the longer the. If you do a short selling, if you do a sell future, this one also the same thing. The longer, better. Meaning to say that if you compare this and this period is very bullish and more trending. This period is only like very short period and one off. Yeah. So you see this one from here, you go slowly up all the way here. But this is different. Go up 1, 2, 3, 4 period, boom. So you will always want to compare this and others. Yeah. So you know whether this is sustainable. This one, you see, this is a long period going up with the higher or longer histogram. But this one, after too far, pop, immediately you see the green disappear. Meaning to say that you know this cluster or this area, the uptrend, the up momentum is not very strong compared to this. So you have to monitor. Not only when you see this or when you see this, you know it's time for you to run. You also look at this. Yeah. You see, this one is like almost 100 right here. But this one even longer. Can you imagine this longer? This is called divergent. When the price is moving up, the problem is this one is moving down. You see or not? Despite the fact that this is higher. Yeah, you see this higher, this is lower, right? But this is lower. Meaning to say that when the price hit the highest, this peak is lower than this, meaning to say that this is not very strong uptrend. This is not sustainable. So combining this and this, plus if you know how to read doji, you know that the reversal is coming. Yeah. So histogram to tell you how strong is the uptrend, how strong is the downtrend. The longer, the stronger. The longer, the stronger. This is how we use it. Yeah. Okay. In this session, this setup most likely will happen. Actually, most of the commodity trading of stock and all indices happen within the first hour of the when the market start, because after a whole night rest, whole night happening, most of the time the first hour of a traded instrument will be more active or even most active. So you will see more likely this kind of setup will happen. But after the first 2 hours, when the market goes sideways, then you may not see too many of this. Yeah. Okay.
Right. Warren, are you done with the content? I think we need to quickly
Yes.
on to the.
Yes, thank you. So we will continue with more Q&A at the back. Okay, thank you. I pass back the floor to you. Let me stop to share.
All right, thank you so much, Warren. So we need to quickly transition to the next speaker. So together in this session, we have the broker partner of DVTC 2024, which is CGS International Futures Malaysia, who joined in this session. So we have a senior associate from CGS International Futures Malaysia, who joined in this session, who is Mr. Muhammad Fawaz. All right, so thank you so much, Fawaz, for joining the session. So we'll hand over the session to you.
Thank you, Shane. So today, I would like to talk about the product that we offer from the CGS International Future, and also to talk about the DVTC 2024. So before I continue my presentation, so this is the disclaimer that all the sharing is cannot be for the buy or sell. So why should you choose us? This is one of the that we offer. So we have the dual license branch nationwide, got a professional advice, complementary trading platform, online application, campaign and webinars, daily commentaries, and we also have the 24 hours, 5 days for the lean desk support.
Fawaz, I think you need to speak louder a little bit.
Okay, can you hear me?
Yes, we can hear. Just you need to have to raise your voice
Okay.
for a little bit.
So let me talk about the product first. So in the CGS internal feature, we have the futures and also we have the CFD that we offer to the client. So for the future, we also have the local and also foreign futures. So for the foreign futures, currently we offer 6 exchange. 3 are from the US, Seaboard, NYMEX and COMEX, and the other 3 is Hong Kong Exchange, Singapore Exchange. And also for the CFD, you also have the local CFD for the stock market, which is from the Bursa itself. And for the foreign CFD, currently we offer for the 6 exchange. So this is the Sharia compliant product that we offer for the Muslim that want to fully trade it in the Sharia compliant. For the BMD, we currently have 3 product, which is FCPO, FEPO, and FPKO. And for the foreign, currently we have the 8 product, and the famous one is the crude oil. Okay, for the trading platform, in the CGSI, we offer 3 trading platform to the customer, to the client. The free one is the iTrade. So the iTrade, we have no charges. So for the iTrade, the client able to trade BMD only for currently, and they're accessible to anytime, anywhere. So usually for the client that want to trade the foreign product, usually they will subscribe for the QST, and currently the monthly fee is 138 per month. But don't worry, the waiver will be available. So these are the advantage for all the 3 trading platform that we offer. So this is the example of the QST. We also have the daily commentary report for the 2 most traded product for the Bursa, which is the SCPO and FKLI. So for this trading DVTC challenge, so we will the client in the can asking for the commentary report during the challenge period, which is starting from the 1st August until the 30th August. So this is the also client also can get all the research report from the iTrade website. So currently this is the campaign that we're running. First is the features reward, Sharia compliant features, and also the CFD. So now let's we talk about the derivative virtual trading challenge 2024. So for this year, the price total is up to 87,000, and for the period challenge for this derivative virtual trading is starting for the 1st until 30th August 2024. So this is how you can register for this challenge. So currently you already can register. You just go to the Bursa Marketplace. So when you go to the Bursa Marketplace, you can register. So once you register, you will receive the confirmation via email. Then after you receive the confirmation, you can start to try to explore the trading platform using the DTS and can start to playing around and then also try to test your strategy also. So the actual trade date it will start from 1st August and we will start with the 100,000 virtual capital. So the highest account balance in the end of the 30th August will win the challenge. So for this year, Bursa Malaysia will only listed 5 products to trade for this virtual challenge: FCPO, FGLD for gold, FKLI, F4GM, and also FCNH. So these are one or three of the benefits that you guys can get for joining the VTC. So all of you, they can experience real-time trading. Secondly, also can sharpen the trading and analytical skill. And lastly, can identify the market trend using the real-time trading that has been offered. So this is the prize winning for this year. For the champion, will get 10,000 and also the advanced futures trading workshop. So the first place until 10th will get the cash prize and also the advanced futures trading workshop. Meanwhile, the consolation for the 10, you will get the 1.2 gram of digital gold from Bursa Gold Dina. So for whoever interested to join this derivative challenge, can go to the Bursa Marketplace or just scan this QR code. Okay, I think we go for the Q&A session. Okay, before I forgot, whoever want to get the if I tell you this for the FKLI and FCPO commentary report during the derivative challenge, you can email to this email, futuresbroking.my@cgsi.com. Just write the title that you want to get the FKLI and FCPO commentary from us. So we will send this commentary during the period lah, from 1st August until 30th August.
All right, thank you so much, Mr. Fawaz, for sharing about CGS-I as well as the benefit of joining Derivative Virtual Trading Challenge. So at the moment, the Derivative Virtual Trading Challenge is open for registration. So you may head to the link I've given you in the chat box to join this DVTC. There's no participating fee to join Derivative Virtual Trading Challenge this year. And on top of that, you have 100,000, virtual account to compete during the entire month of August to see if you can emerge as one of the top 20 winners to be eligible for the prize. All right. So remember to, take advantage of this free challenge that, Bursa Malaysia Derivatives organizing so that you can practice your trading skills in trading futures products. So there are 5 futures products that can trade in this contest and wish you, Godspeed, okay, in this challenge. All right. So now we are back to the Q&A session. So we'd like to invite Warren Mark back for a very good and engaging Q&A. All right. So if any question to ask any of our speakers here today, you may write your questions in the Q&A box, okay, not the chat box, okay? And just now, Warren has also addressed many questions along the way during his talk. So if you have more questions for any of our speakers here, whether it's Fawaz or Warren, please write them at the Q&A box. Right. So the first question I see on my screen is from Lo, right? Do you have any tips for DVTC? Okay, how to win in this DVTC? Maybe we can start with Warren first to share your view, right? What are your tips for winning this DVTC?
Or those who come in, I think definitely they have advantage.
Coming to this session, is it?
Yes, of course. If they join other session, I don't know lah. Because I'm a day trader. one thing is I will divide my position or my fund into two parts. One, I want to hold it for swing trading. Yeah. For example, if you have 50, maybe you can either put 50-50, 30-70, whatever amount you want. Yeah, 30%, 70%. Because especially for FCPO, I would say it have a good trend. Yeah. So I want to capture the intraday volatility because so that I can go in, go out and make a few quick round. But I also don't want to miss the boat of the good trend. Yeah. And of course, how to find trend? The very simple one is if you can see very simply, this is above 20 MA, for example, the trend. And the 20 MA is above 50 MA, and the 50 MA is above 200 MA, for example. Yeah. So this is considered a bull formation, very bullish. So this is on allocation of fund. Second thing is I will choose the instrument. Yeah, we have FKLI, we have the China Yuan, we have FCPO, and we have another two. Correct or not? So
Yep.
quietly tell you, don't take those flat one. FKLI, I'm sorry to say that I will never want to trade that. Don't waste time. Yeah. This is competition. Long term, I will trade. Otherwise, Pusa will ban me. Yeah. Long term, I will trade. But for this competition, I have only 1 month. I will want to go for the most volatile one so that I have the highest potential to win. So first thing, I split my fund into two, intraday and also a bit of swing. Second thing, I want to trade the commodity that is most volatile so that I have highest potential to win. So this is my 2 cent tips. Yeah.
Oh, thank you so much, Warren. So there are two different strategies. One is strategy for real trading. The other strategy is for competition side of strategy. Okay. So in this competition is either you go big or go home, right? So pick the most volatile one. Right.
Go big or go home.
Okay.
Correct.
How about you, Fawaz? Any tips for to win this DVTC?
For me, if you want to win this competition, first pick one product that you really suitable, that you really know, and also that really have the, like Mr. Warren already said, they have the most volume, so it's easy for you to in and out. And also must know that this competition is only for 1 month. So for the swing trading is most likely it's not really profitable to win. So try to be the intraday trader in and out every day so to get the most profit lah.
Right. Thanks, Mr. Fawaz. So the next question, will I pose it to Fawaz, right? So which platform will we use to trade in this challenge?
Okay, for this challenge, Bursa will use they have the cooperation with the QST. So for this challenge, you use the QST.
Yep. So I think this is the time where you can use QST without having to pay for the
Yes,
QST
correct.
service. Okay. So if you have to use QST service with broker, I think most broker will charge nominal fee a month unless you have a huge volume. But for this challenge, Bursa has taken care of the QST fee for you, so you can get to use QST for free for 1 month. All right. So that's a good part. Join this contest. The next question is, would like to pose it to Fawaz as well. This is by Mana. So are the commentary reports for FCPO and FKLI free during the DVTC period in August?
Yes, from CGS-I, we will offer the report for the commentary, daily commentary. So the participant can email to us or asking for the daily commentary from the challenge lah. So we will give it from 1st to 30th August lah, the commentary for STPO and FKLI.
All right. Thank you so much, Fawaz. The next question is I'm not sure whether Fawaz you're aware or Warren you're aware. So the question here is, how did the last year champion manage from 100K to 400K? What is his strategy? What is the risk parameter? How about the margin position?
This one I really have no idea. Yeah.
I
But
also have no idea.
yeah, from my observation for some of the stock trading, they will go for very low price, volatile. It's like what Shen Che, go big or go home. So that I either make it big or they bust. So this one also the same thing. For competition, it's very different from real trading. You need to go for maximum risk. Go big or go home.
Yeah. I was told that the last year winner really go big or go home. Kind of. All right. All right. Thanks so much. Um, let me see. Can we try QSD because before August 1st? So that's question by Maslan.
Yes. Once you register, you can try to trade first. So once the start the 1st August, Bursa will reset again the money to 100K lah, to when the competition is start.
Mm,
So before the competition start, you can start to trading as the practice first.
all right. So the next question by Ihang is that for this DVTC contest, how long could we trade in a day?
This using the real life situation. So it should same like the when Bursa market open. So like a CPO, so when they open the 10:30 until 12:30, so we use exactly the live session.
All right. So the next question here is crude oil included in this contest?
Certainly no lah. So only like I shared before, only 5 product that offered by Bursa, FKLI, SCPO, F4GM, FCNH, and the another one should be FGLD gold.
All right. So among the 5 pairs that you mentioned, which one is the most traded? That's the next question.
The most traded as per now is FCPO, obviously, but also want to take note lah for the beginner. For SPO is not a spot month. SPO, the most traded contract is the third month. So like the trader also must aware lah which month is the most volatile and also most you can in and out.
Yeah. Now, Emil would like to ask Fawaz, right? You mentioned CGS offers comparative rates. So how much for a single E-mini contract on the NQ? What about micro?
Okay, for this you need to email us. I cannot mention it here because yeah.
All right.
For the
So the next question, we'd like to pose it to Warren. So normally when you start trading, like every day, do you trade right from the opening bell, or you observe for half an hour to an hour first before you really put in your trade?
Actually, after 1 hour, almost most of the active trader, professional trader, maybe stop for data rate already. So we don't observe 1 hour or so long in the morning. We actually do our homework before. Meaning to say that if you want to trade FCPO, FKLI, we don't start in the morning. We observe how the US market close in terms of Nasdaq, in terms of soybean, in terms of any product that is relevant to our local product. I will draw the support resistance. I will see the trend from that. And also, if this, for example, like our palm oil also traded in US market, I want to see how the US market, our palm oil close and the movement during the US market. Then very naturally, if this one is in line with like soy oil, soybean oil, then definitely in the morning, there is a very high chance that it will just follow. So immediately when the market follow open, if you really want to observe, I would say 5 minutes is good enough. then you will just trade. Because after 1 hour, actually everything is over already. Yeah, so we will do it not after the opening bell. We will do all the study before that, and we just take a few minutes in the morning after the market open. Then we just go in. Yeah. So this is what I do. Yeah.
Mm. All right. So the next question by Ryan is that if you do scalping, if you identify entry at 5 minutes chart, what is a good stop loss level to put? Is it 10
Okay.
ticks away?
All right. If you really want to put ticks, it depends on not how many ticks. It depends on your risk appetite. Because for scalping, everything talk about speed. You must be very familiar of this so-called candlestick movement, the so-called price action. Because for intraday risk scalping, for stock, of course, you have to see buy sell queue. You need to master the buy sell queue. But for others, you need to master the analysis of candlestick. They call it price action. So you have to know where is the strong support and resistance and how the changes of this candlestick will give you an exit signal. Because the price can run very, very fast. Yeah. Until you maybe you buy immediately give you 30, 40 tick of profit, then you become panic. Should I get out or not? So you must be very familiar with candlestick movement, and especially I will use a lot of observation of gap and the formation of price pattern. Then will give me a better idea. Is there a impending reversal? Of course, if you know how to use MACD, that will help. Yeah. So for take profit, definitely you don't put how many ticks. Yeah, that is not a good way. But for stop loss, it depends on your risk appetite. If you every time can only suffer 200 ringgit loss, then you put 8 ticks. But again, I would say this is not a good way, but at least this is a way that fit into your maximum loss. Yeah. The best way still look at, learn how the reversal signal will trigger you to sell to take profit or cut loss rather than fix a hard coded one like 5 tick or 10 ticks. But as a beginner, I would say that is a good start. Yeah. But when you become more savvy, you shouldn't fix 1 tick, 2 tick, 3 tick. Instead, you want to see, is there a reversal for you to get up? Yeah. This is how I use it.
Thank you so much, Warren, for addressing the question. The next questions by Lee Mei is that during the DVTC, am I allowed to reset once my account goes down to 0? Because if I go big or go home, I can lose all in one trade. Fawaz?
As far as I know, once the trading challenge start already, there's a no reset lah. But yeah, there's a no reset. It's only you can practice before the challenge start. So when the challenge start, so it will reset to 100,000. So when the challenge start already, there's a no reset. As per what I know as per now.
All right. So the next question is by volunteers. Which pair is the most volatile, and what is the maximum lots we are allowed to execute in this challenge?
As per now, as previously I already told, the most volatile as per now is the SPO. Maximum lot is depends on the margin that already set by Bursa. For example, right now one lot for SPO is 7,000. So the total money given is 100,000. So can divide lah 100,000 divided by 7,000 if the client want to trade the SPO. So it's around 10 to 14 lots. But if you take the FKLI, it will be more lah because one lot for FKLI is around 4,000 only. So how many lot is depends on the product that you choose.
Yep. So different product have different initial margins.
Yeah.
All right. So the next question by Lo is that does QIT provide DOM during DVTC?
The
Fawaz.
DOM is stand for what?
Uh, yeah, maybe Lo would like to clarify a little bit. What do you mean by DOM? Depth of market.
If the depth of market should be same as the life, should be around 3 depth of market as per now.
All right, three level on the bid and on
Three
us,
level.
right? All right, so it looks like that's all the time that we have for question and answers today. So if you have interest to join this DVTC, I've just put the link in the chat box again. So you may head to www.bursamarketplace.com/DVTC to enroll yourself into this derivative virtual trading challenge that is organized annually by Bursa Malaysia Derivative. So this is the 4th year that Bursa Malaysia Derivative organizes this. So it's only for this trading challenge only lasts for 1 month. So you may register today, and who knows, you could be one of the winners at the end of this contest, right? And walk away with amazing prize money like 10,000 ringgit. So with that, I would like to thank both speakers here today, both gentlemen, Warren Mark from Tap Optimus and also Mr. Muhammad Fawaz from CGS International Futures Malaysia for sharing with us in this session about how do we use technical indicators to maximize our profit potential through future trading, as well as what are the offerings from CGSI and about this details of DVTC. So thank you everybody for joining this session. Hope to see you guys in our next DVTC webinars. Okay, bye-bye everybody.
Thank you, Shane. Thank you, Bursa Malaysia
Thank you,
Derivative.
Shane.
Thank
Thank you,
you,
everyone.
everyone. Yeah. See you next time. All the best. Good luck in your trading. Make more money. Go big or go bust or go
Yes.
home. Have fun.
Godspeed.
Yeah.